In this video, Tom Lee discusses the optimistic outlook for markets heading into 2025, spotlighting the recent Santa Claus rally and the promising future for big cap stocks. He identifies various tailwinds, including diminished concerns about the Federal Reserve, a completed election cycle, and substantial cash reserves in the market, asserting that these factors will boost their market performance despite challenges like high treasury yields and a strong dollar.
And now we have a lot of cash on the sidelines, and I think companies finally having more courage and what I think we'd call animal spirits and a willingness to start to do mergers and other things that, like capital markets, that actually help stocks next year.
But, and we were just talking about this, treasury yields at the highs of the year, dollar at the high of the year, those two things have acted as headwinds for stocks in the past.
Yes, I mean, that's been a foil for markets to an extent. To me, I think yields, even at around 5%, still aren't really that damaging to markets because that means you're paying 20 times for a 10-year bond. And in some ways, I think, it's not clear why yields have been rising. It could be inflation. It could be the robust economy. It could be markets concerned about, the incoming administration's policies around tariffs, et cetera. So it is something I'm watching, but I don't think it's a foil even at 5%.
Tom, first off, Happy New Year. Good to have you on. How much is the rest of the world's problems benefiting the United States? Sarah kind of alluded to it at the top, which is this is the place to be. The reality is the United States is the greatest economy in the world. The entire German DAX, their Dow Jones Industrial Average, you add up all the biggest companies in Germany, you total them all together, they are not as big as just Apple or Nvidia by itself. How much has Europe's woes, China's woes, how much has that benefited the U.S. economy, benefited the U.S. stock market, if at all?
It's hard to link causality. I mean, for a long time, as you know, outside the U.S., most of the rest of the world is small and mid-cap stocks. I think 95% of all listed stocks outside the U.S. are small and mid-caps. And I think it's the U.S. has really seen companies make the bets in the right places. U.S. dominates technology, healthcare, and financials. Those have really been the strongest industries and the ones that benefit from technology, and the U.S. edge is enormous, right? I mean, outside the U.S., are there thousands or dozens of great technology companies? There really aren't. So I think in 2025, however, if industrials start to do better, then I think Europe and Asia start to outperform. But I think if it's a tech-led market, it's really going to be U.S.
Do you worry? I mean, we showed some of these gains, Tom. Listen, you're Tom Lee. You don't worry about a whole lot of things. But I would say when we're looking at stocks that are up 550% and 300%, okay, there are paradigm shifts which will bring in a lot of money to new things. Is there any part of Tom Lee, not the drummer, that does worry that things are a little bit hot at 40 times forward earnings on many of these, like an Oracle, a name that we didn't talk about much for years?
At some point, valuation becomes a liability when the market isn't able to be surprised or the market has overpaid for future growth. But to me, the last couple of years is really a story where investors have been underpaying for technology and the amount of innovation. I think 2025 is a year where we're going to find the AI and a lot of these applications actually do sort of re-architect the way America does business, and it's vastly cheaper, and that's why these companies are doing so well. But you're right, Brian. At some point, it's a bubble. I don't really think that that's the word yet, because I don't find that much ebullience in our clients. I think our clients are still pretty skeptical about valuations, which is why I think valuations aren't really a problem just yet.
One point I'll just raise on the skeptical note, which is on the call for small caps, Tom, which a lot of people were on the small cap bandwagon this year, and there were times where that really worked, but I don't know if December's a preview of what's to come. Small caps are still down 7% in December as the S&P has gone flat. NASDAQ far outperforming on the year, the small caps. Everyone hoped this was the time where the rally would broaden out, but then when the Fed pared back how many rate cuts it was going to get next year, small caps didn't work. So what makes you think that this will be the year?
Well, that's a really fair observation, Sarah. Small caps really are probably the best expression of when they believe the Fed is cutting for the right reasons, and there was a rug pull in December. I do think your viewers have to keep in mind small caps may not have hit escape velocity yet, but their underperformance for the last decade is 91 percentage points versus the S&P. It's the second worst 10-year underperformance since 1998. And then before
that's
that,
not necessarily bullish. I mean,
well, actually,
for the
it is
right
very
reasons,
bullish,
right?
Sarah. It's super bullish because if you go back to 1900 and use FAMA data, it's the second worst in history. If you take the three worst instances, never have small caps underperformed the next 3 years or 5 years. So what we've done is essentially discounted so much bad news. There's so much skepticism. I think almost everybody that talks about small caps says, well, they haven't worked, so they're not going to work. They're trading at a 10 forward PE. They're going to benefit from deregulation. 49% of small caps are cyclical stocks, which are really primed to do well next year. So I think that the probabilities for a very good year are high at a time when skepticism's high. I mean, isn't that what FANG was at the start of 2023? I remembered how many people said, put a fork in FANG at the end of 2022, they're done. And they just put in the two best years I think anyone could have ever expected.